Hey everyone, welcome back to Corporate Decoder, the place where we take those confusing corporate filings and turn them into something you can actually understand. Today, we're diving into Copper Corp's Form 40F, their annual report. It's like the company's yearly homework assignment, but instead of grades, we get insights into their performance, challenges, and future plans. I'll bet this assignment required a lot of late nights and energy drinks for their finance department. Let's see if it was worth it. Let's jump right into the Annual Information Form, or AIF. Think of this as the company giving us a full rundown of their business, sort of like a corporate autobiography. We will see a complete look at what Copper does, how they operate, and what could potentially go wrong. Before we go any further, it's important to talk about forward-looking statements. It's a legal thing where the company warns you that everything they say about the future might not actually happen. They're not fortune tellers. It's like when your friend says, "I'm definitely going to start going to the gym next week." Now, because Copper is a mining company, they give us estimates on their mineral resources and reserves. Keep in mind these numbers are estimates, not guarantees. It's like guessing how much candy is in a jar. You can get close, but you never really know until you count every single piece. Next, we'll look at disclosure controls and procedures. This is how the company makes sure all the information they share with the public is correct. It is like double-checking your work before you turn it in so you do not get a bad grade. Copper's CEO and CFO have to sign off on these controls, basically saying, "Yes, we believe everything here is accurate." Then there's the internal control over financial reporting. This is even more detailed than the previous part. It is about how they handle all the money-related information. KPMG, their external auditor, checks this over too to make sure everything looks good. Speaking of KPMG, they are the independent auditors. Independent auditors are like referees who make sure the company is playing fair and following the rules when it comes to its finances. KPMG has given their stamp of approval, which is always a good sign. Let's move on to the audit committee. These are the people in charge of keeping an eye on the company's accounting and financial reporting. The board determined that Jill Angevine and Mr. Tejani are audit committee financial experts. It is like having detectives in charge, making sure there are no tricks in how the company handles money. Copper also has a code of ethics. It's like a set of rules everyone in the company needs to follow. It's there to prevent people from doing things they shouldn't be doing. Time to talk about accountant fees. Copper paid KPMG for their services in the last 2 years. These services include making sure the company's financials are correct and taxes are paid. Off-balance sheet transactions are deals that do not show up on the company's balance sheet. Copper says they don't have any of these transactions that would significantly impact the company. Here, we find details about the company's contractual obligations. Contractual obligations are promises the company has made to others, such as payments for rent or loans. These are future payments that they are committed to making. Let's talk about corporate governance practices. These are the rules and systems that control how the company operates. There are certain differences between Copper and other US companies. It is similar to how different countries have different rules. Copper, as a Canadian company, has its own corporate governance. Now, the number everyone cares about, the number of outstanding shares. As of December of last year, Copper had about 103.5 million shares out there. This number is important because it is used to calculate a lot of financial metrics, like earnings per share. Now let's look at the audited financial statements for 2024. It's where we get a detailed look at how the company performed financially. The numbers will tell us the story if the company did better or worse than before. The company's revenue for 2024 was about $534.8 million. Revenue is the amount of money the company brought in from selling copper and other metals. If the revenue is higher, it typically means they sold more products or that the prices of those products increased. Next, let's look at net income. It was about $70.8 million. This is the money the company actually made after paying all its expenses and taxes. We want the number to be high because that means the company is profitable. Finally, let's check out the total assets. These were valued at approximately $1.8 billion. These assets can include cash, equipment, and mineral reserves. If assets are increasing, it can mean the company is expanding or becoming more valuable. Now for my overall take on Ero Copper, the revenue of about $534 million is a pretty good amount that shows strong sales. I think it is worth keeping an eye on this stock. While the mining business can be up and down because of commodity prices, Ero Copper seems to be managing pretty well. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, don't forget to hit that like button, leave a comment, and subscribe for more insights into the corporate world. Let me know what filings you want me to decode next.